Hello everyone, welcome back to IFRS Easy. Today we'll be talking about how to identify a lease. You must be wondering why this is supposed to be difficult, but the standard itself makes provision for close to 20 paragraphs to discuss this crucial topic. Identifying a lease can be problematic. In fact, let's first talk about how important leases are. You know, there was a joke that was going online sometimes around 2019 that was talking about the owner of Virgin Atlantic, that's Richard Brown. The major issue was I was one day going through his financial statement, and he noticed that there was nothing like an airplane on his financial statement. Meanwhile, he runs an airline. And so the question was, why is it that there is no airplane on his financial statement? Because under IFRS 17, if you are running an operating lease, you are not obliged. In fact, the standard does not allow you to recognize if an asset. That was a problem. And then what it means in essence is that because he leases most of his airplane, he has to be disclosing them instead of recognizing them. And if you look at the financial statement displayed there, you will see that the figures that we currently have for airplanes is quite huge. If you look at it currently, you will see that what we have for leased items is quite huge. So that means that was a problem, because probably before now he doesn't recognize that on his financial statement. So back to our story. In terms of identifying leases, what are those things that we have to consider before we can say, oh, we actually have a lease? Now, before we start, it is important to note that at any time when you initiate a lease, that is the time when you actually make this assessment. That is, this contract that you have, does it actually contain a lease or not? So we have noted that there is trouble with identifying a lease. But before we continue with that, let's look at what a lease contract should be normally. A contract is or contains a lease if the contract conveys the right to control the use of an identified asset for a period of time in exchange for consideration. You will see that emphasis that says the right to control the use of an identified asset, and that will be the recurring theme in this class. Basically, you have to have the right to control the use of an identified asset before you can say that you are recognizing a lease, or in fact before you can say that the contract contains a lease. And so how do we know that there is a lease, or whether this contract that has been given to us, regardless of the legality of the contract, whether it actually contains a lease? Because in practice, I've seen quite a number of contracts that, although the client tells you that this is actually a lease contract, but in substance, with respect to the requirements of IFRS 16, they actually fail the definition of a lease contract. What that means in essence is that you don't categorize them as leases, and then you don't apply IFRS 16 requirements with respect to treating them. At best, maybe they could be service contracts, but look at that very soon. So there are three questions to ask. The first question is there an identified asset? The second question is, does the customer obtain substantially all economic benefits? The third question is, who has the right to direct the use of the asset? Once you're able to profoundly identify and answer these three questions, then you can decide whether truly you have a lease or not. Now, it is important to know that those three questions have to have a yes as answers before you can say truly you have a lease contract. So let's take the first one. It says, is there an identified asset? Okay, so if you look at it, we have three major points here: a specified asset, capacity portion, or substitution right. So what we are looking at is, when we ask the question of is there an identified asset, that is, if you have been given the contract document by your client, and then you communicate with your client and you have a discussion with your client, and you also read through the contract document, the recurring question you should be asking is that, in this contract document, is there an identified asset? Now, there will be an identified asset if it is specified in the contract. That is, the asset itself is specified in the contract. Now, if I am to lease a motor vehicle and I approach a vendor to say I want to lease your vehicle, if I don't identify the exact model of the vehicle that I want to lease, or the brand of the vehicle, or the number attached to the vehicle, then I don't have a specified asset. So it is important that when you go through the contract document, it has to be that there is an asset that has been specified. So if it is a building or it is a land, it has to be specified. The square meters, the floor number, everything that relates to the building that makes it identifiable has to be clearly stated in the contract. So the first question is there a specified asset? Now, another question you might want to ask is that, what is the capacity portion? Now, there are times when you don't necessarily have to lease the whole of a building. Sometimes it could be just a floor of a building. And so if it is a capacity portion of the building, meaning that there is a physical distinct nature of that building. So leasing the second floor, it has to be clearly stated that what you are leasing the second floor. If it is a third floor or the fourth floor, it has to be clearly stated. So IFRS 16 doesn't necessarily say that you have to lease the whole building. But what IFRS 16 is saying is that for you to be able to say there is a specified asset, even if it is a capacity portion, there has to be that portion that has been clearly stated in the contract. Now, there are times when it is not even a physically distinct asset. There are times when it could be a non-physically distinct asset. So if it is a non-physically distinct asset, for example, if you look at what we have here, there is a oil tank farm. And what happens majorly in oil and gas is that so many suppliers come together to say, we want to lease this oil tank, and then we want to be filling it with refined oil. Before you can say that you have an identified asset, it has to be that you have substantial portion of that oil tank. Now, if you are leasing just 40% of that oil tank farm, then automatically there is no identified asset. So it has to be that for you to say you have an identified asset, you are leasing a substantial portion of it, that is almost the whole full capacity of it. Although IFRS 16 does not give a hard and fast rule percentage, but in practice, oftentimes are not. If you have 80% capacity portion of a non-physically distinct asset, then you can now say that you have an identified asset. But if like 5 oil companies come together and they have 20% of the whole oil tank farm, then you are not leasing it. It is just a normal contract service that you have entered with whoever is giving you that access. So it is very important that we take cognizance of this. Now, another thing is, but before you can say you have an identified asset, it has to be that your supplier does not have substitution rights. Now, if you look at the game of football, the coach has the right to replace whoever is a player on the field that is not performing well. Now, what it means in essence is that if you have an asset that you have leased and the supplier has the right to replace it with another asset, then you don't have an identified asset. The only time when the supplier can say he wants to replace that asset and you still have an identified asset is if the replacement is a temporary replacement, or it is a replacement as a result of the fact that the supplier wants to repair or conduct some maintenance on the asset. If otherwise, if the supplier will benefit as a result of replacing it, then there is no point in saying that we have an identified asset. So it rules out the fact that we have an identified asset. So basically, if you run through those three, the first item is that you have to have a specified asset. The second one is that even if it's not specified, like having a whole building, even if it is a portion of something, it has to be that if it's physically distinct, that portion must be clearly stated. If it's not physically distinct, then you have to have a substantial portion of the non-physical distinct asset before you can say you have an identified asset. And the last item is that your supplier must not have a substantive substitution right. If your supplier can replace the asset, then you don't have an identified asset. And once you fail any of those three, automatically you do not have the right to call that asset a contract that is as a result of leases, meaning it does not meet the definition of a lease contract. Let's quickly look at a practical scenario. It says here that Mary entered into an agreement with a mall operator to sell coffee in the mall for a 2-year period. Mary uses a movable kiosk and is permitted to sell the coffee at any free space on the floor of the mall. The mall operator has the right to change the location of the space allocated to Mary at any time during the period of use. However, there are many areas in the mall that are available and that will meet the specifications for the space in the contract. Is there an identified asset? Pause this video and try to answer it before we continue. Alright, so we are back. Our conclusion is that Mary does not have an identified asset. And the reason being that although Mary has entered into a contract with the operator, and Mary even directs the use of his own kiosk, Mary sells coffee at any free space on the floor of the mall. But you notice that it says that the mall operator has the right to change the location of the space allocated to Mary at any time during the period of use. Now, what it implies is that the mall operator has a substantive substitution right, because the mall operator can tell Mary to take the kiosk to some other part of the mall. Now, because of that, Mary has only entered into a service contract. Mary does not have a lease contract. What it means in essence is that Mary will not be recognizing a right of use asset, a lease liability, or whatsoever that comes with respect to IFRS 16. So it is important that we identify these differences. The second question to ask is that, does the customer obtain substantial economic benefit from the use of the asset? It is important to note that all cash flows that relates to using that asset must flow to me as a result of leasing that asset. If otherwise, then I do not have a lease contract. Now, there are three different items that we have to consider here: the period of use and the defined scope. Now, both are together, and what it means in essence is that for the period with which I've leased that asset, I have entitlement to every revenue that is generated as a result of using the asset. If there is any revenue that goes to another party other than me, then I don't have a lease contract. Now, so if I have leased a motor vehicle for a particular period of time, say for example for 5 years, and I'm supposed to operate it within just a city, as long as I'm operating it within that city, any revenue I generate as a result of using it within that city has to be totally mine. That's what it means. So let's look at this practical scenario. It says Mary entered into an agreement with Company Z to use an identified asset, a retail outlet. Mary has assessed that she has the right to direct the use of the asset. However, Mary is required to pay Company Z a percentage of her sales from the use of the retail outlet as consideration for the use of the asset. Does Mary obtain substantial economic benefit? Pause the video and answer. And so we are back. And the major question is that, does Mary derive substantial economic benefit from the use of that asset for the period of use and for all the portion of cash flows that relates to Mary? Now, if you look at it, it says here that Mary actually receives all the cash flows from the asset, but after receiving it, Mary pays a particular percentage of cash flows to the supplier. Now, the fact that Mary pays a particular part of his cash flows to the supplier does not necessitate the fact that Mary receives all cash flows. Now, the first question to ask is, whenever the customer is paying, does the customer pay directly to Mary? Now, there's no indication here that the customer does not pay to Mary, meaning that Mary receives all cash flows related to his retail outlet sales. Now, because of that, Mary now takes a portion of it and gives it to the operator for the purpose of repaying the liabilities within Mary's lease contract. Now, because of that, Mary has a lease, even though Mary is paying from the cash flows received. But the major question that we are asking is that, is Mary actually receiving those cash flows before now giving it out as payment for leases? Now, because Mary receives all cash flows, then Mary has the right to receive substantially all economic benefits generated as a result of the retail outlet sales. Now, it is different from the fact that Mary may have a portion of it that is being received, and then the other portion goes directly to the landlord or to the operator. But because this is not the case here, then we can say that Mary has a lease. Now, the third one, which seems like the most important one, is that who has the right to direct the use? Now, there are three items to look at. Is it the customer that has the right? Is it the supplier? Or is it predetermined in the contract? Now, if it is the customer that has the right to use the asset, then automatically we'll say that as long as the customer has satisfied other two that we've listed earlier, in terms of whether we have an identified asset, whether the customer receives substantial economic benefit as a result of using the asset. Now, the third one is, does the customer have the right to direct the use of the asset? So, as long as it is the customer that has the right to direct the use of the asset, automatically we say that this contract is a lease contract. But if it is the supplier that has the right to direct the use of the asset, then there is no lease contract. Now, if you remember, for those that have practiced IFRS 16 before, we have what we call right of use asset. The reason why we call it right of use asset is because you have the right to use that asset, meaning that you have the right to direct the use of the asset. So automatically, if you don't have the right to direct the use of the asset, then you can't even have a right of use asset in the first place. Now, the third one is that, has it been predetermined in the contract? Now, this is quite tricky. If it has been predetermined in the contract, then there has to be another question that should be asked, that as at the time when it was predetermined in the contract, does the customer have the right to design that asset as at that time? Was the customer part of the design process of the asset? If the customer was not part of the design process of the asset, then automatically it does not contain a lease. So one, is it the customer that have the right? If the customer has the right, then automatically contains a lease. If the supplier has the right, then automatically it does not contain a lease. But if it is predetermined, then there is a further question as to, was the customer part of those that designed the asset? If the customer was part of those that designed the asset, then we can say that it contains a lease. But if not, it does not contain a lease. Now let's look at this practical scenario. It says Mary enters into a contract with a ship owner for the transportation of cargo from the USA to the UK on a specified ship. The ship is explicitly specified in the contract, together with the dates of pickup and delivery. The ship owner does not have substitution rights. The cargo will occupy substantially all of the capacity of the ship. The ship owner operates and maintains the ship and is responsible for the safe passage of the cargo on board the ship. Mary is prohibited from hiring another operator for the ship or operating the ship herself during the time of the contract. Does the contract contain a lease? The answer is no. But why? The first thing you notice is that we mentioned the fact that there is a transportation of cargo from USA to the UK, which is on a specified ship, meaning that it has satisfied the requirement of we identify an asset. So we have identified that there is a specified ship. We have also identified that the ship owner does not have substitution right. However, because it is the ship owner that operates and maintains the ship, and because there is no information that mentions that Mary was part of the designing process of the ship, it then means that this information that we currently have here has been predetermined. As a result of that, we will say that there are no leases within the contract. So can you solve this? Mary enters a contract with a freight carrier to provide Mary for 5 years with the use of 10 trucks identified by their serial numbers X1 to X5. The trucks are owned by the carrier. Mary determines when, where, and which goods are to be transported using the trucks. When the trucks are not in use, they are kept at Mary's premises. Mary can use the trucks for another purpose, for example, storage, if she so chooses. However, the contract specifies that Mary cannot transport explosives. If a particular truck needs to be serviced or repaired, the carrier can substitute a truck of the same type. Otherwise, and other than on default by Mary, carrier cannot retrieve the trucks during the 5-year period. So does the contract contain an IFRS 16 lease? You will want to consider those 3 items that we mentioned earlier. Is there an identified asset? Does the customer have substantial economic benefit from use of the asset? And does the customer have the right to direct the use of the asset? Once you're able to establish those 3, then you'll be able to answer this question of whether this scenario contains a lease or not. So that's it about identified leases. I would like to see your comments below to answer the question and also other suggestions that you may have. Thank you for watching. If you like this, please subscribe, share, and I'll be back for more. Thank you.